One moment. Okay. So back where I was, we have a really exciting discussion ahead. We're going to cover how to break into finance, what it's really like to build a career in investment banking, private equity, and fintech, and we're going to hear personal stories and lessons from our panelists here that they've learned along the way. In the final 15 to 20 minutes, you'll have the chance to ask your own questions directly to our panelists. And be sure to stick around till the end because we do have a surprising announcement for you that you don't want to miss. So, with that, let's hear introductions from each of our panelists. And Barshva, I see you on my screen first, so why don't you go ahead and kick us off?
Sure thing. And thanks for organizing this. My name is Parshva Vakaria. Originally from New Jersey, currently live in New York. Went to NYU for my undergrad and graduated in 2020. After that, I spent 2 years in investment banking, particularly working in healthcare at Evercore. And then after that, I moved over to EQT, which is a Swedish private equity firm. Been there for the last 3 years, focusing on healthcare, technology, services, and insurance. Yeah, thanks for having us and organizing this.
Absolutely. Thank you, Barshva. Let's go to Abhishek next.
Okay. Thank you, Maran. I hope you're able to hear me well. Really excited to be here. And Also, thank you to the fellow panelists. My name is Abhishek Bhasin. Over the last 15 plus years, I've been in the financial services space, primarily banking, lending, fintech, uh, credit bureau space. My deep expertise is in the lending space, both commercial and consumer. And I've dabbled in fintechs all across the life cycle from very early stage, startup stage to very to Series A and beyond, and public companies. So really excited to be sharing what I learned all through these years of my experience, and happy to address any questions you have. Yeah, thank you.
Thank you, Abhishek. Last but not least, Sagar.
Yeah, thank you, Manan, for having me. So I'm Sagar. I grew up in New Jersey. I went to Rutgers. I studied finance and computer science and got a minor in math there. After Rutgers, I went to Deutsche Bank. I was in investment banking there for 1 year. I did real estate, gaming, lodging, and leisure investment banking. So after that, I moved over to Lexington Partners, where I'm now a senior associate in the co-investment team. So Lexington Partners, we are a private equity firm that primarily focuses on secondaries and equity co-investments, and I'm on the co-investment team. And super excited to be here and answer any of your questions.
Thank you, Sagar. So this session is going to be broken into three sections. And the first one is going to focus on breaking into finance. Whether you're still in school, a fresh graduate, or even a mid-career professional, the first and usually biggest challenge is actually getting your foot in the industry. Our panelists have all, of course, navigated that process at some point in their lives, each in very different ways. So let's dive into how they broke in, what worked, what didn't, and what lessons you can take away for your own journey. So, Barshva, I'll pass it to you first. In an environment where where the applicant pool, everyone has top grades and internships, how do you differentiate yourself? What for you was the single most decisive factor in landing your first role in investment banking out of school?
Yeah, it's a great question. It's funny. I went to NYU where probably when in my business school class, half, if not, or maybe a third of the class was attending the exact same recruiting events, meeting with every single bank, going to every information session. Many of us were South Asian or Asian, and we all had great GPAs, took the same classes, all had different levels of experience. So a lot of people looked and kind of came off exactly the same. So the differentiation point is actually really, really important. I think there's two ways to do this. One is to really lean in on some of the differentiated experiences you've had growing up. So I think a lot of us, like our parents, have made us learn an instrument, join a sports team, be involved in something that's outside of academics. And I think really leaning in on that, talking about that, and showing how that's such a focal point in your life and how it's helped you get to where you are today is super important to be able to talk about to really differentiate you from just, I have a, high 3 point something GPA and I took all these finance classes and that I think that's something that almost it's table stakes. A lot of people will have that when you go to the recruiting process. I think the second thing is especially when you're trying to land your first full-time job, having any experience that you've worked on something or with someone doing any type of role, having past work experience, I think really, really helps because it shows that, okay, like this person, I don't have to teach them like the super basic stuff, the soft skills that you learn from just, the first time you do any type of job, you work through all of those first time jitters that you wouldn't otherwise have the opportunity to work through until you actually do that internship or first time job out of college. So I think that's something that's super important to try and land an internship, whether it's your freshman year, sophomore year, junior year, just to get through those initial working pains so that you can hit the workforce really well the first time you land that first job.
Absolutely.
Yeah, I think I'll just quickly add to what Parshva said. I think that that was really, really important. One point he hit upon in terms of how can you relate your experiences to what you are going to do. So to make it more tangible, I would say that it's very important to know what your areas of strength are. Don't like there are always areas of gap with all of us. We're always learning, right? Learning process never ends. But what are your areas of strength? And if you can potentially link those areas of strength with the job or the role, that is very, very important. That'll really help you kind of, put yourself, stand yourself apart from the competition. Then it's not just about grades. It's not about school, as Parshura said, that everybody's kind of looks the same. So focus on the areas of strength and harp on that this is how it's going to solve the problem of the company you're trying to get into.
Yeah, and sorry, one final thing I wanted to add was really on Parshva's thing regarding differentiation. So, as you mentioned, look, this is a very competitive industry. There's a lot of people. They're all going to have very strong GPAs, similar work experience. So, how do you differentiate yourself? And one of the really interesting things is on your resume, there's always a line at the bottom that says interests. And honestly speaking, that's probably one of the most important lines because you could say, I have a high GPA. I know my technical questions, but the way the recruiters see that is that those are just checking the boxes. So many people pass those parts. So how is it that you can really stand yourself out? And a lot of it is literally the interest line. Sometimes, even myself when I'm interviewing people, but also others when they interviewed me, they looked at my interest line because they saw the GPA, they saw I could match my technical, so they want to see how good of a fit I am. And we talked a lot just about my interest. And if you can get a really strong conversation going, that helps a lot. So those are one of the really big differentiators to get yourself out there. And ultimately, it is sometimes like it's a shot in the dark. Sometimes your interests just won't align with the interviewer, and it just sucks. It is what it is. So it's a numbers game. But if you have enough interesting interests, there's a high chance that you're going to click with someone, and it's really going to help you out.
Absolutely. Thank you guys. Great insights. Moving to the next question, I think generally in life, right, it's very easy to talk about and showcase our successes while sort of, burying the uncomfortable rejections, failures, topics that we don't really want to think about or talk about. So, I'm gonna ask a bit of an uncomfortable question here. And Abhishek, I'll go to you first. Were there any pivotal failures or rejections early in your career that ultimately shaped your path?
Uh, yeah, I think if I have to look back, I kind of sort of divide my career into two parts. So prior to my MBA, I was in marketing consulting, loved marketing, but then I wanted to kind of move to finance, so I specialized during my master's into finance. The key thing, when I was trying to get into banking, and then once I got into banking was that, which is kind of I would put in that bucket of I could have done it better, is getting impatient. So if you made it, for example, you got a job at a bank or at a finance institution or any kind of financial services provider, and you're looking to grow, that the impatience should be in terms of, okay, I want to learn things fast and I want to learn as much as possible and create a path for myself based on where my area of interest is and where do I see my growth. But with me, what I realized was that I was getting impatient to move up faster. And what that meant was that I was overlooking some of the opportunities that I should have looked at. And like I was thinking that, oh, why am I not able to move fast? Like, and by fast, I mean within a year and a half, within 2 years. Whereas not looking at and forgetting about how others who have reached the position of, say, vice president or senior vice president, they took like 10 years, 8 to 10 years of consistent hard work and connections with others. So I think that's something which you have to keep in mind, that okay, we all want to grow fast, but also think about how do you plan those steps rather than getting impatient and taking those decisions without talking to people, without having a very in-depth conversation. You just jump to conclusions that, oh, this is not going to work out, I have to do something else, or I have to find, or I have to maybe move out of that company. So just keep that in mind, that you have to be patient and you have to create a path.
Absolutely. Sagar, any points you'd like to add there?
Yeah, so this is a little bit different from what he was talking about. Rather, I guess the biggest failures and rejections really came from when I was first interviewing for my jobs, or my banking job, and then ultimately my private equity job. And it really helped me because one thing it taught me is when you first start interviewing for banking, you're probably going to fail your first interview. That's what I learned. And look, I prepped super hard. I got all the mock technicals done. I talked to a lot of seniors who went through the process. I thought I had this, and I went to the interview. I froze. They asked me some curveball questions. I just didn't know how to answer, and it was just bad. So obviously, I did not get that job. And one thing that it actually did teach me is it's really applicable to honestly any recruiting role is look, supposing you want to go into some industry and you have a dream company that you're trying to get to, I would say go interview for other companies in maybe similar positions before, just so you get those reps under your belt. Because high chance you're going to fail your first interview. And getting those reps under your belt is so important because you're going to learn all the things that you did right, all the things that you did wrong. You're not going to freeze up anymore. And ultimately, look, when it came to banking, I failed my first three interviews, and then after that, I passed every single one because I just did so many of those. And even in private equity, when I recruited for private equity, I failed the first two, and I got the third one. So it's just like that. So if you have a dream role, look, it's not going to always line up that your dream role is going to be an interview after ones before, but ideally, if you are able to stagger it, try to interview for other other companies with similar roles before you aim for your dream role interview.
Yeah, I won't add on too much. I think both of them covered quite a bit, but just want to echo. Yeah, I mean, I failed my first banking interview very badly, and it's just I think it's just part of life, and part of the recruiting process. You have to go through those reps in order to really find the right role and succeed. And half of it is, you might not have prepped as well as you wanted to, or you might have gotten nervous during that first, not blaming yourself that, I'm the reason that this happened is also important. It gives you the confidence to go to the next one and say, okay, that one wasn't the right fit. Now I'm more mentally prepared and ready for this. So I'm going to really succeed. And I think like all of us have probably gone through that multiple times in our recruiting careers.
Thank you. And you guys all touched on a great point about recruiting. That's obviously something top of mind, especially when folks are looking to break into the finance industry. So, Parshva, I'll start with you. I'll direct the next question to you. How important is networking compared to technical skills when you're looking to land your first role?
Yeah, I do think it does depend from the type of role you're looking at, but taking like investment banking as an example, I actually think it's probably the first or second most important criteria that they have when selecting you. I think a lot of, like we talked about earlier, like a lot of people have really good GPAs, really great work experiences, will all be super smart and polished. But having enough people that will go and vouch you and say, I talked to that person, he or she's really cool. I would love to have like the opportunity to work with them. If I had to spend, 100 hours working with them in a week in the office, like I would enjoy doing that. I think that's actually really, really big criteria, especially in these very high stress roles where you are spending a lot of time with people in the office and you're working a lot and you have to get along with them. That's a really important criteria that your peers that are 2 or 3 years senior to you are who are kind of filtering out the right candidates are going to look for. So, in investment banking for sure, you need to, if you want to get an interview at a bank, you have to talk to minimum 3 people at that place in order to really meet that criterion threshold. It's also like a filtering criteria for the recruiting team. So if they have 100 applicants and 50 of them have not spoken to more than one person, those 50 people are not going to make it to the next round. So that's just kind of how it's a numbers game, like Sagar mentioned earlier. Like that's just how it works. In other roles, like they might value technical experience a little bit more, but I think that's as you go further in your career, the technical experience, and maybe Abhishek can speak better to this, but I do think that the technical experience becomes a little more important, but still not the most important thing as you move on.
Yeah, I think that's a really good point, Parshva. So just I think I'll double click on that piece around the law of averages. What all of us are talking here is that when I was doing my MBA, they said that the key thing they always harped on every day was network, 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 and you have to kind of like peel the onion here, like or basically go deeper to understand why. Because if you're meeting someone, a recruiter, that recruiter already has many other connections. So why would they like you or kind of consider you? So you have to kind of first break into that's let's call it a circle, right? Like if you think about advertising also, a message has to come to you at least 3 times for you to register a certain brand. So in the same way, the more people you meet and the more number of times you meet, you're trying to understand them better. You're able to create a relationship. It's not a transaction anymore. And then obviously they become comfortable. And the more they see you, the more they start trusting you. And therefore they're able to share things which they would never share at the first instance. And that's when you really learn the true information. Okay, these are the challenges, these are the priorities, these are the problems. And then you can frame your experiences, what skills you bring according to that narrative, which is very, very important. So that's why the more people you meet and the more out you will learn, they will learn, and it'll be better for you to connect with them. So it's that law of averages kind of thing.
And my next question is kind of in the same vein. Focus on recruiting. Looking back, what non-obvious experiences helped you stand out in recruiting or when changing roles? I know we talked a little bit about sort of the behavioral aspect. Sometimes, especially when you're first breaking in, everyone's kind of on a level playing field when it comes to technical skills. Then your network and your behavioral ability can sometimes differentiate you. But Sagar, what are some other things here that come to mind when you think of what helped you stand out and land your first role in investment banking?
Yeah, look, that's a big, good question, but honestly speaking, I'd have to echo back to networking because I feel like that's really the thing that truly stood out. Look, I had my interests on my resume. I happened to connect well with some of the people who interviewed me, but ultimately, what really, for at least your first job, what they're really going to look at is your GPA, which everyone or a lot of people you're going to compete against have a good one. Two is your work experience. Pretty much every or most of the people you're actually really going to compete against are going to have at least 1 to 2 internships by the time they're a junior. Actually, usually 2 or more. So yeah, you probably need a freshman year, a sophomore year internship just for a junior year internship role. And but no, number three again had to go back to just networking. It's really just connecting with as many people as you can in that firm or also in other firms, casting that wide net. And it's yeah, it really just goes back because there wasn't really too many non-obvious things that truly helped me in my first role, or even in my second role for that matter, because finance is just such a networking heavy industry. The interests are there for honestly the interview, in my opinion. That helped a lot, but the networking helps. And the way to network is, look, you don't only have to network with people from your own school. That's how if you go to school, they're going to tell you reach out to alumni. Look, those are definitely the first people you should reach out to. But number two is you don't only have to look at college. Like I even reach out to high school alumni. I reach out to fellow Jains. Like James was honestly a really, really good community to help out. Anyone with the last name Shah, they're good Jews, so I reach out to them. Like you just have to cast as many connections as you can, and that's what really, really helps me. So overall, to to your question, there weren't too many non-obvious things that really helped me in my first 2 roles. Maybe they'll matter more in the future, but for now, it's really just the try of good GPA, good experience, and networking.
Sure. And Barsha, maybe if you want to expand there and talk about what made the difference when you went from your first role to your second role, when you made the transition from investment banking to private equity, did that look different from when you made the transition from undergrad into your first role?
Yeah, it definitely did. I think in your first job, people give you a lot of slack for they're still developing and learning. And I think when you start to go in your second job and, probably third job in the future, that's when people expect you to bring a lot more of those soft skills and like already have those things very polished because you have been in the workforce for a certain amount of time. So I think it's really important to, it's not, you don't want to get super nervous and overthink about, okay, I need to make sure I do this, 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 and this, but really understand like, what am I trying to gain out of that first role and what do I want to take into my second role? Same thing with your second role going into your third role. That'll really help you also, stay motivated and keep certain goals in mind of, okay, I might not be in this career or this specific field for 15 years, but when I do leave, I want to be able to carry on these tangible skill sets with me, so that when I go into my next role and the role after that, I'm bringing something else to the table and I'm also ready for that next step. So I think that's something that's kind of important to keep in mind. You might not feel it or see it as tangibly. It's a lot of intangibles and a lot of the soft skills, being able to talk to people, especially senior people, and keeping that networking component, like that doesn't stop with just recruiting. It continues throughout your entire career in your current job with the people that you're working with, but also externally, building those connections and having those relationships that people can talk with about you without it just being a working relationship is super, super important. So I think that's one thing that really shifted from first job, which is like put your head down, really work, show that you're capable, that you can grind. But then second job onwards is a lot of the intangible soft skills where you need to maintain those connections with different people in order to keep succeeding moving forward.
Thank you, Prasha. Um, so just take a quick detour for a second. While today's focus is on careers and the finance industry, we all know that personal finance is just as critical. That's where our generous supporter, Manish Doshi, comes in. Manish is an expert in helping individuals and families plan for the future, and we're grateful to have him here. So I'll now hand it over to Manish for a quick word about his services.
Thank you. One second, let me just share my screen. Oh,
Sounds
I
good.
cannot.
Yep, I've just given you permission, and let me pin you as well.
All right. I think today's presentation, like my topic that I wanted to talk about perfectly aligns with the current interest as well, that most of us are here for. I also work in a financial services industry, not technically a finance background, but being an insurance broker, I get to work with multiple companies, not only of insurance, but also of finance. I also manage investments. So this is also a parallel field in finance that we can work with. And if you're more interested, we can talk about this more. But I just wanted to briefly talk about my journey, like, what got me into this role and what my story is so far. I got licensed as an insurance broker in Feb 2023, but I purely entered it as a part-time opportunity. I am full-time into IT, data engineering, and data architectures. So if you want to talk about that and network about that, happy to do that as well. But I purely treated this as a side hustle, no active marketing until I started sponsoring YJP sessions. This is my first paid sponsorship or marketing of any sorts, but mostly getting business from word of mouth and merely spending less than 2 hours a month. And I started doubling my income slowly and steadily. To most of the folks, this does not seem like a big number. To me, this is. Why? Because I did not even intend to earn this much, right? And this is purely on less than 2 hours per month. And if I put in more hours, I know I can cross 100,000 just from the side hustle easily. Something that's for someone that's a full-time job salary for most on an average folks, and that will be my passive income, side income as well from this thing. But yeah, I'm mostly focused on education-based approach that establishes transparency and trust, and that's why most businesses, including some from our group, the Jain group, has been because of this. Like, they prefer to work with me because they have established that trust. We have established that network, and they prefer working with me rather than someone else who will give them wrong advice. I would say, as you're breaking into this career, focus on your why. Why do you want to be in this career rather than the what and the how? Right? Like, even if it's an insurance broker or if it's a financial services industry, like the why matters because that's what will keep you going for years to come. and you will not jump. My why of joining this financial service or finance industry while being full-time into IT was obviously make more money. Let's be real, like, we are good Jews, we are businessmen. We want to earn more money, we want to scale up, we don't want to pay more taxes, right? But at the same time, the tax laws of Canada particularly is very hard when it comes to passing down wealth from one generation to the next. Unlike India, where you inheritance is not taxed at all, right? So it's easy for your parents to pass down a home, but that's not easy here. So that's what got me thinking, like, how do I plan my retirement? How do I plan my estate? And that's got me interested in this industry. And I started learning more. The more I learned, I saw this income potential, and obviously my Guju brain started working, like, hey, there's a lot of potential. Let's switch to this as a part-time. Another thing was like flexibility of working part-time hours, and also higher opportunities for returning customers. Like if you are in a mortgage or a real estate, the chance of you getting business from the same person is drastically low, because not the same person will buy houses on an average more than 2 or 3 times in their lifetime in North America, right? But here, the insurance, the investments, as the kids grow up, their needs change. Travel insurance, there's ample opportunities to get the same business from the same revenue and earn more money on the side. And obviously, last, it's the education. Like as I learned this, I want to start helping family, because 80% of the North Americans don't have life insurance or don't have a financial plan in place. So I thought, why not educate through the process of my selling business? That's it, folks. If you have more questions about my business, or if you want to talk more, here's my contact. We can get in touch and we can talk this forward.
Thank you
I'm
so much,
recruiting.
Dinesh.
Yeah.
Thank you.
Thank you.
Okay. Now that we've talked about getting into finance, let's talk more about what happens when you're actually there. Deals, innovation, and growth are really the heart of the industry. And, whether it's big transactions, private equity moves, or, how fintech has been shaking things up, especially in the last 10 years. This is where the real action happens. So let's hear from our panelists how they've seen things play out, in their experience. So, Sagar, I'll go to you first. What's one deal or transaction that fundamentally changed the way that you look at business? And feel free to get as specific as you like, or be as vague as you want.
Yeah, no, of course. And it's actually really funny that our our break had at an insurance broker, because it was actually an insurance brokerage deal that really made me think very differently. So I work on equity co-investment, so I'm pretty generalist across all industries now. And what it is why it was so interesting is that it really taught me the value of platform and add-ons. And what that means is that you have a larger company, maybe a larger insurance brokerage. Let's just say, forgive me if I'm getting too technical. Feel free to ask some questions. Let's say you're in a larger platform and you're valued at 10 times earnings. And then this larger platform, it goes around and it buys a lot of these smaller insurance brokerages for maybe 5 times earnings. But then the moment these small platforms are on the larger platform, the combined company is still valued at 10 times earnings. So effectively, in some ways, you're creating value out of thin air. So why is that? Why are we all not billionaires yet? But the reason is that because you have to, one, integrate these acquisitions really strongly. You get a lot of benefits from being a small company, being in a larger platform, because you get centralized marketing, a lot of the back office functions, you get a lot of synergies from that. Supposedly having the larger platform, you have a stronger brand name, so your growth can accelerate. So overall, like, you're just going to see that you're, at least if you go into the financials, there's a lot of private equity industries where they love add-ons, and insurance brokerage is one of them. Registered investment advisors are another one. Another one I've seen are aftermarket industrial services companies, but there are a plethora of more. There are a lot of other industries, and it was just really interesting to see that, because obviously, look, we're all good Jews. We own a lot of businesses, so you can see that maybe if you own one convenience store versus owning five, you can, not only will you just get the 5 times the earnings because you have five convenience stores, but you might actually get an uplift in valuation just because you have multiple ones. So you can centralize a lot of your back office resources, that creates some cost synergies. And also, just having a bigger presence, you might get some more growth out there because your name is just more prominent. So that's just something really interesting that I've noticed.
Thank you. And I think that's one of the clearest explanations of sort of the private equity model and philosophy generally. So it's very helpful. Barsha, I'll pass it over to you. I know you're in the space as well. Maybe you can talk about some notable deals that have come across your desk.
Yeah, it's interesting. I was actually also going to talk about platform and add-on type of situation as well, similar to Sagar. So I'll try and keep that one briefer. But I do agree with him. I think that model is getting a little bit challenged right now, and being a little more pressure tested. So I think what's an added layer that you really have to add is like, what is my moat as a company, and what is something that I can do that other people can't. So I think that's something that's becoming increasingly important as AI starts to really take over. They spent 25 years building, like a clinical dictionary, and like that required doctors and clinicians and all this stuff to really be able to build that. I think overnight you can probably build that, if you spent a month or 2 months, with a few engineers and a really strong model, you could probably recreate that entire business overnight. Now they have a lot of customers and they're in pretty much every hospital. So that's a competitive moat that they have that someone trying to come in can't do overnight. You can't win customers overnight like that. So really trying to understand when you're looking at businesses, what do they have that's differentiated that other people don't have today, I think is really important. I think the second thing is that to Sagar's point, like that model of let me go out and buy a bunch of other people at really cheap, it's not actually that complicated. And I think sometimes we think, you have to do something super, super complex in order to be successful. And sometimes it's as simple as you just have to have capital and the guts to go and do it. And you can do something that is super simple, like let me go and buy a bunch of other insurance brokerages and bring them into my platform and centralize all of these functions. It's not something that's super technically complex, but it does require you to have the guts and the capital to be able to go out and do that. So I think that's also important kind of to reframe and think about, okay, like, people are starting businesses, for instance, or thinking about investing in businesses. I need to do something super complex with AI and software. The other side of that equation is you just have to be able to do something better than everybody else. You don't have to necessarily be the one to do something super complex and technical.
And I want to expand on that a little bit. You guys both talked about valuations of companies. How do you evaluate whether a company is truly creating value or kind of just, engaging in financial engineering and, using paper to sort of make themselves look larger than they are?
I'm happy to take this one first, but
Sure.
I think what we often see is, so when people, Sagar talked about earnings earlier. Earnings is kind of a fuzzy number because there are also adjusted earnings, meaning like I've done all of these things and the impact of those actions aren't going to be seen for another year or 2 years or 5 years, but I want to get full credit as if all of those actions that have been taken are already baked into the business. So for instance, if I implemented a new software that makes my company 5% more productive, when I go and sell the company, I might tell the buyers, hey, I want full credit as if I've already gotten those 5% efficiency gains today. That, as an investor, you have to be really, really careful about evaluating, because a lot of companies will come and say, we've done this, this, and this, and therefore we want, 10% credit. Sit there and say, okay, I'm going to buy the business today, and all of those actions haven't been completed yet. So I'm probably going to have to pay for some cost to achieve all of those future efficiency gains. And by the way, they may or may not play out way that they're pitching it to me. It might turn out percent or 3% or even 1%. So you have to be that's actually where I think anyone can go and buy a business if you have the money to do it. What you have to be careful of is evaluating those things. What are the future risks and how realistic are those plans and efficiency gains and different actions that they're taking and pitching and saying, okay, we've done all these things and we want credit for it. So that's kind of where like the financial engineering piece often comes into play, where people will buy something thinking that, I'm going to buy this thing that's super optimized. And it turns out when they get under the hood that they have to do a lot more work.
Yeah, I think that I'll just quickly add to what Parshva said. I think that's very interesting, and I will actually try to bring the other side of the house. So so I am on the startup side, managing, raising money from many investors, specifically angel and VCs. So the idea is that when you go to venture capitalists, and if your company is going from seed to Series A, the expectation is how can you actually show an ARR, like which is the annual recurring revenue of 100 million plus. Now that's where going to what Sagar and Parshva said, that the projections piece come in. So are you projecting if today you're making $1 million a year and that's a recurring revenue you're expected to make, what is that path from 1 million to 100 million? So that's a huge jump, right? It's 100x. So that's where the expectations of investors versus what truly is happening on the ground, can you actually do it? Is like, where do you find that happy medium? So, because there are a lot of assumptions being made on both sides. So, and that's where the traditional finance kind of approach comes in, that, okay, this is the revenue number, the top line number, but keep going down and start looking at cost of goods, start looking at gross margin, all the way to EBITDA and net bottom line numbers. So you have to break it down, and then you have to kind of go really deep and understand the pipeline and the annual contract value of each of the customers that you as a startup are bringing to the table, and how strongly you're able to communicate that. So it's like it, I've seen that from many sides now as a lender, businesses coming to me and asking for money on being on the startup side, I creating the financial projections and going to the investors. So there are a lot of assumptions. So how reasonable they are based on the economy you're operating in and on the other benchmarks, that is very critical. So yeah, it's a lot of deliberation, I would say.
Yeah, no, Parsha and Abhishek gave really good responses, so I won't hash on those points. But I actually wanted to go back to my roll-up strategy point, because ultimately a lot of that can really end up just being straight up financial engineering. As I say, you buy your business at 10 times, you're buying a bunch of add-ons for 5 times, but your full platform, once you're on, is valued at 10 times. You're creating value out of thin air. But the only reason why that, or your full value or your full platform should be valued at 10 times, is if you do the full integration, you get all the central resources together, you get that organic growth uplift because you get that stronger brand name strategy. However, what we've actually noticed in private equity or just in general is that a lot of times these companies, they buy all these add-ons just so they can get some really, really strong returns. But the problem is they don't actually integrate these acquisitions. They slap a logo on, they're like, okay, we're integrated. No, that's not how it works. You really need to integrate all your back office, get the culture in line and all those functions. And sometimes like they just do not integrate at all. They buy the company on paper, they're bought, but they're not integrated. And if they're not integrated, they should not be getting that platform value. So you can actually search up. There's some private equity companies suing each other because one of them bought a company from another one that they claimed was integrated, but once they bought it, they're like, this company is not at all integrated. That the way you claimed it was supposed to be, and therefore we should not have paid our price for it. So that is just straight up financial engineering if you just buy a bunch of companies and you don't integrate them. And the second point I want to talk about is look, Parsha gave a really, really good explanation on EBITDA adjustments, because a lot of times there's these companies that you buy and they say, oh, there's this much of synergies that I'm going to get. And because of that, I want to value my EBITDA on this synergized multiple. But then maybe in your 2 years, you actually aren't able to execute these synergies. So you actually didn't buy it at the multiple that you claimed to. And another thing on Abhishek is he's talking about ARR at the top. The number of tech companies I've seen, actually, they don't even start at ARR sometimes. They start at something called CARR, or contracted ARR. And that's even dumber, because this is like ARR that's contract. It's not even actually like your ARR, or let alone revenue. And they're like, okay, yeah, we're valued at this time's contracted ARR. And then I want to say, okay, let's look at your historical period and see how much of your contracted ARR actually ends up being ARR. Just because you're contracted doesn't mean you actually become ARR. It's not like these contracts may or may not be binding, or if they do, they might have small breakage fees, downsell happens, a lot of other factors. So a lot of times these companies, yeah, they start with very, very high valuations, or very adjusted valuations, so they make it seem like they're cheaper than they are. But then if you really have to put it under a microscope to see, okay, like, are these numbers actually real, or should we be valuing the companies at these multiples?
Great points. Thank you, guys. Next, I want to go over to Abhishek. Abhishek, of course, lives in the fintech space, and we've really seen over the last decade, maybe more, some of these highly disruptive fintech companies. I mean, in the brokerage space, Robinhood, in the lending space, SoFi, and so on and so forth. So, Abhishek, with these fintechs disrupting traditional banking, what risks do you see for incumbents, and where do you see opportunity as well?
Yeah, so I think as you pointed out, like fintechs over the last 10, 15 years have been a big disruptive force. And the reason, like I'll just go into the reason that so they've disrupted a lot of things on the consumer side. A lot is now happening on the small business and commercial side. And they've targeted sort of the bigger markets like mortgage and then, the personal finance space. And then obviously the investing space. The key thing is like if you kind of go a little deeper to understand why it happened. A lot of services that were provided by traditional financial institutions like banks or other kind of investment firms, they had a lot of legacy systems, and obviously, because they were built over time, and financial services is very heavily regulated, so there is a lot of regulatory burden. But then on the side, you had this a lot of technology companies coming up and technology improving our lives in many different ways. Like I'm talking about the big tech and also other tech companies. So what was kind of happening is that financial services players, they had the regulatory mode of being able to get deposits, for example, like banks, and they had a lot of money sitting, and they had the horizontal stack where we can serve all customers, but they were not able to understand deeply segments of customer and provide them with that product. So if you come to think about what fintech is offering versus what bank is offering, the product is essentially the same. A mortgage is a mortgage, a line of credit is a line of credit, a brokerage account. But what they did was they enabled a technology layer to make it convenient for the customer to go through, for example, KYC, make the advice more personalized so that it's aligned to how they make money and how they want to save money. So that's kind of the big thing. So that's where a lot of disruption continues to happen. Now the big risk is as we move forward, as the data exchange happens, and a big part of data exchange is how the value is getting exchanged. So you have a lot of issues on the cybersecurity. You have issues on data privacy. We're talking about open banking in the US now and other parts of the world, looking at the Europe model, looking at the PSD2. Again, why that open banking, it was a big promise around open banking that, oh, it'll usher in a lot of competition and a lot of choice. Why it didn't happen? Because it's kind of a push model. You're pushing customers towards another provider instead of banks providing that service so every time customer has to open a new account. So what that really means is now that if banks are able to work with the fintechs and provide those services, now these customers don't have to go somewhere else. Whereas if the banks continue to not do that, that's when the banks get disrupted. So there are other companies like Robinhood that may come up, and I'm not even going to talk about Bitcoin and stuff that is happening on the tokenized assets. Lot of stuff happening, especially with the new administration in the US. It's going like it's becoming a little bit crazy in terms of the opportunity that is coming to the table. But you have to think about the data, you have to think about privacy, you have to think about what you're solving for, and you have to think about is it done in a regulatory compliant way. So a long-winded answer, but yeah, the risk is around how you handle customer information and how you serve them in the right regulatory compliant way and an ethical manner.
Sure. Now, just going more broadly, a word we hear thrown around in the news a lot is the big scary T word, tariffs. Generally, how do global macro factors, interest rates, regulation, geopolitics change the way that you approach deals? Maybe Barsha, if you want to kick that one off.
Sorry, struggle finding the unmute button. Yeah, it's interesting because I think especially at a lot of the larger institutions, those really shift a lot of things in terms of how they think about and underwrite deals. but either specifically to specific industries, but also just at a high level. Okay, like, are we going to do deals right now, or are we kind of wait out and see what happens in the market? So I saw there was one company we were selling in 2022 when I was in banking. I believe it was March of 2022. And right before the deal was about to sign, the Russia-Ukraine war started. And, it's happening halfway across the world. You'd think that there's not a huge impact on what's happening in America, for instance, but a lot of the buyers actually dropped out of the process and said, we don't know what's going to happen in the world. We don't know what's going to happen in global markets. And so we're going to sit this one out. And company's really awesome and great, but we just can't do it right now because there's too much uncertainty. Luckily, the deal ended up getting done like a week later, but with a much smaller and thinner pool of potential buyers. But those types of things really do impact at a macro level how people think about the markets and investing and timing. And so a lot of these wars will have a huge, huge impact on how people think about buying assets and selling assets. The interest rate point is also a really big one because those movements are actually quite slow. Like it does take a long time for interest rates to move, but even those small movements of, interest rates are getting cut by 25 bips will really excite people and then say, okay, now's the time to start buying and getting back into deal mode and let's go start looking at companies. So all of those macro factors do have a big, big impact. And even the tariff point, we were diligencing one company earlier this year. It's a global services business. And we had to look at every single product and service that they sold and figure out what was the potential tariff impact going to be because no one really knew, like, one thing might be said, and then a month later, the entire policy could change again. So we had to kind of figure out what do we think the tariff impact is today? What do we think it could be 6 months from now when kind of evaluating that specific company and pretty much any asset we were looking at?
Thanks, Barsha.
Yeah, I was happy to jump a little bit on that question as well. I think Parsha really hit a lot of good points regarding tariffs. Like I can say personally that when Trump's tariffs were announced, a lot of deals that we had in the pipeline just vanished immediately because one thing you're going to learn is this industry hates uncertainty. If we know the tariffs are going to be there, we can figure out a way to get deals done. But when they were first announced, we had no idea what they were, how they're going to impact, who's going to get affected, who's not. So there's just so much uncertainty. And one thing the industry hates is uncertainty. Once you figure out, and look, once we figured out, or I guess there's more clarity on the tariffs. What a lot of private equity companies did is that they started focusing on companies that weren't affected by tariffs. So it's a pretty obvious answer to that question specifically. But ultimately, look, all these macro things really affect everything. And there are so many times when there's a sale process for a couple of our companies, tariffs happen, and it's just uncertainty. And one of the interesting things you see is, the Russia-Ukraine war, like some of the companies we're like, this is in banking, we're looking at having no presence in Russia, no, none in Ukraine, none in Europe in general. They were actually just an American-focused company. They were just, even though this war technically does not affect them in any way really at all, they have no customers in Europe either. They were just putting a pause on all their processes because they just don't know what's going to happen with the world. So it's interesting that a lot of things that really don't affect your company at all will trickle down just because they hate the uncertainty of the environment. They don't know if Russia, Ukraine is going to create more interest rates or oil price shocks or customers or a recession or stuff like that. So ultimately, it's just uncertainty, and you're just going to really learn that a lot of things that even when you play the stock market, a lot of things that theoretically should not affect your company, they get announced in the news, and stock prices will tank. Companies will pull out of processes, and you'll be like, "Why? It doesn't affect you at all." And in some ways, the market is irrational, but in other ways, it's just the industry just hates uncertainty. But once we have more clarity, at least on rates, every time we have a Fed meeting and we actually get a little bit more clarity, it's easier to get deals done because then we can actually model in things that we want.
Yeah, I think I'll just like extend it what Sagar said with one key point is that uncertainty, especially in the financial services sector, leads to a lot of like it drives the sentiment. And we've all heard that, how sentiment impacts. So if the money is freely available, the sentiment is positive, so many deals are done which may or may not make sense from a valuation perspective, even at a very high valuation. But when the sentiment is down, very strong, financially sound deals are rejected and are not done. It's So it's very sentiment driven, whether it's right or wrong. That's a lengthy separate discussion. And then the other part, specifically in the banking space, if you look at the banks and other financial intermediaries, uh, they have cost of capital, and that cost of capital is also kind of linked to LIBOR, linked to the US, the central bank, how they set their repo rates. So everything kind of gets connected to everything else. So that's another point around what Parshva and Sagar was saying, that okay, you may not have customers, but your funding will potentially get impacted.
And, beyond tariffs, the other big buzzword in the industry, of course, is AI. So I do want to ask all of you, how are AI, machine learning, and alternative data actually being applied today? How are you utilizing AI in your careers? Maybe each one of you can take 2 minutes to answer this.
Okay, I can get started. I think machine learning AI, given as I'm part of fintech, is very key to the kind of work I am doing. My focus has been a lot on how do you use alternative data and machine learning and advancements in AI to kind of better understand credit risk. Uh, because I am specifically in the lending space, lending to small and medium businesses, which is a highly underserved segment. So how do you actually understand the risk that these companies bring to the table? If you look at the existing approaches based on credit scores, based on very narrow data that is collected from the small business borrower, that automatically kind of means that the lender will assess these companies as high risk because they don't have enough data, they don't have enough information. And if you don't know something, you will assume that it's high risk. Whereas with the AI and machine learning, and specifically bringing in a variety of data, financial, non-financial, you can actually now predict, understanding how this business is going to perform, looking at their context, looking at their economic context, right? Where infrastructure, supply, demand, geolocation dynamics, things like how well they are connected to their community, so as to truly understand what their risk footprint is today and what their economic potential is tomorrow going to be, and then make that credit risk assessment. So machine learning AI has a huge impact if done in the right way, without bias, and by making sure that the data you're feeding has been clean, has been looked at thoroughly. So with the human in the loop supervision, I think that is a huge potential to change, specifically the lending aspect of what I'm trying to do.
Yeah, look, I'm happy to take it next. How has AI affected me? Well, unfortunately, I can't use double dashes anymore because people think I'm using ChatGPT, but all kidding aside, look, AI, a lot of the tech companies that we invest in, or pretty much all of them, have AI, or they say that they have AI. And ultimately, what you have to figure out is how many of them are they saying it as a buzzword, or how many of them are actually using AI to do something interesting or to create a better product. And look, that's something that private equity is really trying to figure out. And honestly, we might not even have the right answer. Only results will tell in 5 years whether we made the right bets. But what we have kind of came to consensus is that, look, AI, a lot of that is trained on models or data that you have. So how do you differentiate whether your company is stronger is if you have your own proprietary data set, something that only you can get. This is not something that maybe you can get from 10Ks or just publicly available data sources. You need your own set of proprietary data because that is something that no one else can replicate. AI models, that's something that you can hire some coders to do. A lot of really, really smart people. Honestly, you could even leverage like a lot of the OpenAI, Anthropic, all of those modules to, you don't even have to create a lot of things yourself. You could just use the models already built. However, the data that you have, that is your own. If you can have your own proprietary data set, that can really differentiate yourself and make your AI product a lot stronger. Because this is something, and it lends to the point of moat. This is part of your competitive moat. This is something that only you can do, really. And pivoting to a little bit on how it affects my job specifically. Well, we recently got ChatGPT Enterprise, so look, I'm still I'm still trying to learn how to use it better myself. But one of the cool things is that in our firm we have a lot of data. We're a secondaries firm. We just have so much of sponsor reporting that and just company valuations, how a lot of private equity portfolio companies have done. And what AI, at least specifically, has helped me do is it helped me sift through our Google Drive or our box system and just find a lot of the relevant transactions that I'm looking for. Sometimes I can ask, okay, look through our box, find a list of the private equity transactions in the X sector and which companies did well, which companies did not do well, why they did well, and stuff like that. And it just looks through box and it helps you find a lot of things. So look, it gives you the obvious things and a lot of efficiency gains. So that's how it affects my job specifically. And I have seen a lot of, or I've talked to some other bankers who are saying there's like a tool called Rogo AI a lot of banks are adopting that should help a lot of analysts in terms of turning comments, maybe making a sim into a model, and just a lot of other aspects for productivity gains.
Yeah, great points.
Yeah, I can keep mine a little bit brief because I agree with everything that was just said. On the company front, I think there's two sides of AI. One is like the customer facing side, and the other is the internal functions and operations side. Um, I think that we're still pretty early innings, to be honest, on both of those fronts. I think people are trying a lot of different things and either succeeding or failing in small ways or big ways. At some point in soon, it will start to become table stakes that you have to have some level of functionality of AI, both on the customer side, but also on the internal efficiency side too, in order to survive. If someone's able to do something 5 or 10% more productive than you, it's gonna be a lot harder for you to survive and charge the same price to your customers that someone else is doing, where they're very tech forward and AI enabled. And then same thing on the customer side. Like customers are, even if you've had very loyal customers for a very long time, they might stick with you as these next couple of years kind of flesh out and people figure out what is AI going to look like on a product facing side. But at some point, you do have to deliver something that shows tangible ROI to them, that is AI enabled, because everyone else is going to eventually catch up and bring that same value to your customers and try and poach them. So I think that there's those two sides are going to be very interesting to see how things unfold over the next 2 to 3 years, because I think a lot of people talk in the buzzwords, and again, I won't claim to be an expert in this field at all. But a lot of people still do not know what it's going to look like in 2 or 3 years. So it's going to be really interesting to see how things play out.
Yeah, I think I'll just add to what Parshva said. I think very, very interesting point around a lot of things are happening, but still at an early stage, so we don't really know. So what that really means is there are two kind of things. One, directly from a career perspective for the audience, there is a lot that you can try out. So there is a lot of opportunity to create new applications. Like specifically, Sagar mentioned around the LLMs, right? So you have the underlying large language models, which anybody can now go and test and create and try to create new applications. But the key thing is going back to what Parshva said is how does it solve the problem? Whether it's the problem of the customer, which could be external or internal. If you keep that in mind, so the part is that if you have domain expertise or you can gain domain expertise in a certain specific area and then start to apply AI to solve the problems or find opportunities for that specific domain, if you try with that objective in mind, that'll really help you leverage AI in your career and kind of stand you apart. But having the objective function very clear, why are you doing this, is very important.
Great points, all. Before we continue, let's pivot for a moment. So, nearly every finance career starts with a strong academic foundation. A college degree is pretty much universally required at this point, and often folks looking to break in will pursue advanced studies or certifications. Our sponsor, Accept You, has helped thousands of students gain admission to their top choice universities. So, I'd like to invite Nikita from Accept You to share a little bit more about what the organization does.
Hi, thank you so much for that introduction and for having me here today. So my name is Nikita and I am Partnership Manager at Accept You, a virtual college counseling company. Prior to this, I've worked as a classroom teacher for 6th grade and 12th grade, and as well as a college counselor. Yep, okay. So these are our founders, Mark and Steven. Accept was founded in 2010 when they met in the admissions office at Cornell University. Mark has earned his MBA at UNC Chapel Hill, wrote the book Untangling the Ivy League, and has served as chair of UNC's Admissions Advisory Board. Stephen earned his PhD from Rice and served as an assistant dean at Cornell and as an associate dean at Princeton. Together, their vision was to make admissions expertise more accessible to families. So why us? For 15 years, over 8,000 students have chosen AcceptU to be their trusted source for admissions consulting. And I believe that our results speak for themselves. So we have over 400 plus verified 5-star reviews. 91% of students have been admitted to their top choice institutions, and we've seen 4 times higher rates of admission than the national average. This is what sets us apart, our exceptional counselors. So our team is made up of entirely former admissions counselors from selective universities. Collectively, they bring over 500 years of insider experience, giving students and families unique insight into what colleges are actually looking for. Some of our programs. So our programs start as early as grade 8. For students in grades 8 to 10, we focus on building a strong academic and extracurricular foundation. This includes identifying which classes to take, what clubs to be involved in, and even helping students apply for summer programs. For grades 11 and 12, we guide students through the full admissions process, from finding colleges that are the perfect fit for them to helping them write their essays. We also offer tutoring, test prep services, and programs for graduate school applications. This one is my favorite, the Summer Mentorship Program. So this is where students work one-on-one with faculty or PhDs. They pursue independent research projects across 4 tracks: civic engagement, research, leadership, and business or entrepreneurship. And these projects not only help them grow, but really also helps them stand out in their application process. So you can see here on the right some of the projects that students have been a part of. And I wanted to highlight 2 specific ones as they are relevant for today's event. Finance research by AcceptU students. So one of the most exciting outcomes of our summer mentorship program is the work that the students produce. For example, they have conducted impressive research in finance. On the left, you can see a paper by Vedanta Das, which explores how learning chess can help improve financial literacy. It will be published by Advances in Financial Education, a leading journal in the field. The paper shows a step-by-step chain leading chess to financial literacy. At university, Vedanta hopes to secure funding to test his hypothesis on students. On the right, one of our students, Sam Stein, wrote about the history of financial fraud, published in the quarterly magazine of the Museum of American Finance. Sam shows that while the technology of fraud has changed in the last few decades, the psychological plays underlying many scams remain the same. Finally, I wanted to share that we have a free webinar coming up on September 25th at 8 p.m. EST. This is exclusively for the YJP community. The session will be led by Leslie O'Connor, a former admissions officer from the University of Southern California and Babson College. She'll discuss why starting college prep early, even in late middle school with grades 7 and 8, you might think that's really early, but it does make a big difference, and how students can use each of their high school years to build a meaningful profile for their college applications. So I hope you'll join us for that. And please feel free to share this opportunity with families who have children in early high school or late middle school. And to register, you can scan the QR code on the screen. I'll just leave it up for a few seconds.
Thank you so much, Nikita. And yes, please do share this out with anyone you think may be interested, speaking to the group at large here, and we will circulate all these materials post today's call as well for your reference.
Thank you. You can also schedule a free consultation on our website, acceptyou.com, or you can just email me directly if you're interested in learning more, Nikita@acceptyou.com.
Thank you so much.
Thank you so much.
So we'll get back into the session now. We've explored breaking into finance and the exciting world of deals and innovations. To close out our discussion, let's take a step back and look at the bigger picture, career lessons learned along the way, and where the industry is heading. So I'll start first in the spirit of our Jain Dharam. Sagar, I'll go to you. How do you balance ethical responsibility with the pressure to deliver financial results? How do you reconcile your own Jain faith with sort of the demands and pressures of your career?
Yeah, look, so I'll give you an example. A lot of times on banking, even private equity, you get a financial model, and ultimately the seniors, if they really like the deal, they want you to effectively make the model in such a way where it shows it's a good deal, even when you might say, okay, maybe it won't be. So you could juice up the revenue growth, you maybe juice up the EBITDA margins, you juice up the free cash flow, and ultimately by those ways you get better returns. So look, this is a tough ask because ultimately they are your bosses. They're the ones who evaluate you. They're the ones who give your performance reviews. So you don't want to not give them what they want. So look, the best thing I do is sometimes say like maybe when the senior said, yeah, run this model and try to get like this 2.5x return. And then I could easily just juice up the revenue EBITDA, get him his return, send it to him, say, okay, that's it, I got it. Or what I like to do is I like to actually, have a sit down in his office, talk to him, say like, look, I ran the numbers as many times as I could, but I just could not get to that return by using reasonable assumptions. And look, ultimately from there, it goes from there. I voice my opinion. I do what I believe is my part. And a lot of times, look, they understand what I'm saying. They said, okay, maybe it's not as good of a deal, or we just run the returns on what you're actually getting. And sometimes they just say, run them anyways. And ultimately, I'm a little too junior, so I can't really say no. But I do hope that when I'm more senior in my firm, I won't have to be doing these situations.
Barsha, how about you?
Yeah, I think it's a great answer from Sagar. I'll change the question a little bit, talk a little bit about ethics that you might face kind of in your career on a maybe a day-to-day basis. One example, when I was interning for investment banking, meaning I had not yet gotten my full-time offer. We had a generalist program. You could work in any sector, and a staffer would basically come and say, Here's the deal you're going to work on." I remember the first week of my internship, and I was very, very scared to have this conversation. I went and told my staffer, hey, like, I know we operate in all these different industries, but like, I would really appreciate not being staffed in anything that's kind of in the defense sector, anything to do with like consumer and meat, things that kind of were outside of like ethical boundaries. And I think in a world and a sector when people tell you you have to always say yes and never say no, it's really, really hard to take that step and make that decision. But I think when you take a step back and think about your career and what kind of values you embody and you display on a day-to-day basis, if you can't get behind what you're doing on a day-to-day basis, it is really, really hard to stay motivated and also feel like, okay, what I'm doing is right and that what I'm doing is sustainable. So I think being able to and actually people surprisingly do respect that quite a bit. I think a lot of people are afraid and think, how are they going to react? I always have to say yes. I'm so junior in my career. I can never say no to somebody. People are surprisingly really, really receptive to that. My staffer was like, I really appreciate you saying that. And I'm going to make sure not to put you in something that you're not comfortable in because I want to respect your boundaries and your ethics. And when it came up at a later point in time when I got staffed in something that he didn't realize was something that was not so obviously something that I wasn't comfortable with, I went and told him, hey, remember that conversation we had 9 weeks ago? I'd really love to not have to work on this thing. I'm happy to take on anything else. He was like, oh, I'm so sorry. I will totally take you off this thing and we can find something else for you to work on. So something to keep in mind as you go through your career is not always having to say yes, and really thinking about what are my personal boundaries and ethics that I want to keep in mind. That's the reason we're all in this community, and those are the values that we want to embody and on a day-to-day basis. Something to keep in mind.
Absolutely. Thank you, Sagar and Barsha. Abhishek, direct the next question to you. You had spoken a little bit at the beginning of our call about how initially in your career you were constantly, trying to, you really wanted to just move up as fast as possible. Um, what advice would you give to someone who wants to build a long-term resilient career in finance and not just chase the next promotion?
Yeah, so yeah, that's a really good question. So I think like looking back and reflecting back, what I would say is that as I'll just kind of start at the point where the comment I left with earlier in the discussion is that you have to be patient, like first of all, but it's easier said than done, right? Like if you're seeing people around you and we as human beings have a very natural tendency of starting to compare. So comparison, and then if we are starting to compare, then sometimes it also leads to criticism or complaining. Oh, I didn't do this, or I could have done this better. So I would say try to avoid these three C's. Don't compare, don't criticize, don't complain. If possible, we as humans, sometimes it's not possible. So once you're kind of patient a little bit and you're sitting down and reflecting, then you can actually start thinking about, okay, where do I see myself 2 years, 3 years, 5 years, 10 years? And in terms of where how the industry is changing, where I would like to position myself, and what are the areas of interest for me. So it's always about, and then once you start thinking in those lines, you kind of start to bucket your journey into three steps. This is, if nothing changes, this is the status quo, I'll continue to do this. This is my best scenario, and this is the worst scenario that I could live with. That if something goes wrong, if I have to, I'm okay to live with this, but I will still try, I will take risks, because you have to continue to take risks. The thing is then, once you start to create those three buckets, then you start making a plan of how do I go from step one to step two to step three, by which I mean, okay, I have to gain these skills, I have to be connected to these people, I have to understand these sectors to move to my next stage, or to the next, or to a different company. So overall, I think if I have to reflect back, I started with banking, but then there came a point in my career where I was like, oh, I'm in a big bank and I feel kind of lost because there are 50,000, 100,000 people in that entity. I want to do multiple things. I want to wear multiple hats. I want things to happen at a faster pace. So, where would that be? And then ultimately, I realized that fintech is the space where I want to be, where I can actually contribute more meaningfully and be acknowledged and recognized for that, and be in the earlier stages. So kind of that's seed stage, series A, series B stage. And that was a journey. I started associated myself with accelerators, with incubators, started advising different fintechs, trying kind of interact with many founders, many people who are running the fintechs to understand what does it mean to run a fintech? What does it look like? Before then making that shift to actually being a part of the fintech as head of product, and then, running another fintech as a chief risk officer. So it's like you have to create a path and always kind of think about, okay, where can I contribute? And the other part, which I think maybe I'll elaborate later if we have time, is what I am thinking over the last few years is what is my legacy as well. Like how do I make this world a better place through the contributions I can make. So I think that's another kind of framework that I've been thinking about over the last few years.
Great point. Thank you, Abhishek. Um, General question I'm going to pose to all of you. How do you personally continue to learn and stay sharp in such a fast-changing industry? What are some practices you engage in?
Yeah, look, happy to kick this one off. So look, ultimately in finance, you're going to be working a lot of hours. A lot of times, you do your work and just want to go home, sleep the little hours that you can, at least when you first start your job. And like sometimes the hardest thing is just getting that extra mindset to just actually learn a little bit more. When you're doing a deal, you could just do all the tasks that a senior says. and kind of go on autopilot, just do them. But one thing that you can really do to actually differentiate yourself and get better, get smarter at the industry is to really learn what they're doing. Just look at why they're asking for this thing from their point of view. Actually learn the transaction. Don't just build a model from what they say. Actually look at the company. Just look at just start looking at things from a 500 feet view, because as an analyst you're going to be in the weeds, and a lot of times that really hurts your ability to truly understand the bigger picture. So one of the things that you can really do is just take a step back, take a little bit of time, look at all you're doing, and just look at things from a bigger picture, because that's ultimately what you're going to need. Those are the skills that you're going to need for when you move up in your career. And the second thing I'll have to say is just read. This is look, in technology, you keep on learning new code bases, you keep on learning new APIs, things like that. No, but in finance, I would say the best way to get better is just keep on reading. Read Wall Street Journal, Bloomberg, Morning Brew, whatever newsletters that you can. Understand what's going on in the industry. Understand what firms are buying, what companies, when are they selling. There's so many market study reports, especially in private equity. A lot of times, whenever we do a deal, we hire or McKinsey, Bain, BCG, one of those are typically hard to do a market study. These are like 150-page decks that are super robust, and often you don't need to know them to actually do the stuff that you need to do. But if you actually go through all 150 pages, you're going to learn so much about the industry because they're extremely robust. So I would say you have to just keep on reading and just get smarter, especially if you want to know this is a specific niche that you're trying to target. Read as much as you can, market studies and stuff like that. Become an expert in that sector, because that's like what's really gonna help you get promoted and drive a long-term career in that specific sector. And the last thing is, now it's new, but AI, ChatGPT, like ChatGPT doesn't just solve everything. You need to actually know how to prompt ChatGPT correctly, and that's like a whole skill in on itself. So look, that's something that even I'm still trying to get better at. We just got a ChatGPT subscription for my firm, so I'm playing around with it more. But I do think that this is going to be really, really big in the firm or just in the industry going forward. So knowing how to use ChatGPT is actually a whole skill in on itself.
Absolutely. Barsha.
Yeah, I'm happy to take this one next. I think there's three things I'll say. The first is you should look and see what are my peers doing that I think is really good, and what are things that I can adopt in the way either they do things on a technical basis, practices that they have, skill sets that they have. And again, maybe I'm going a little antithetical to what Abhishek said earlier about comparing, but not comparing in the sense of like why are they better or worse than me, but how can I adopt some of the best practices that other people are doing and how they're really finding success in the things that they're doing. I think is really important to stay on the same level playing field as your peers. The second is to look at what your immediate supervisor is doing and how are they thinking about things, right? Because eventually that's the role that you are potentially trying to step up into. So, I think Sagar mentioned this. A lot of times we end up just executing on a bunch of things because that is what your role is, and the person right above you is doing a little bit more of the thinking, cohesive. How do I piece together the story? And taking a step back, I know, like, yeah, he mentioned when you can get those couple hours of sleep, you want to take them. Sometimes using a little bit of that time to say, okay, how do I think about what my VP is thinking and what they're going to say to our boss? Because we're all looking at the same information, but they're kind of synthesizing that in a way that's going to be digestible for the person immediately above them. And that mindset shift will help you start thinking, how do I play up into the next role and kind of get there to that next level and stage and not just be the execution person all the time. So I think that's the second thing to keep in mind. I think the third I would say is to kind of latch on to what Sagar said. Reading is really, really important, definitely in your own industry. But I think finding something else that you find interesting and really reading a lot of the advice I think we'll give is depth is really, really important and a lot of different facets. And reading something really in depth and understanding it is going to, one, make you more interesting, but two, you're really going to become an expert in a certain. Because like for me, like I love reading about foreign policy. It has nothing to do with my job at all. Maybe it's tangential, but I will read every single article that comes up on Foreign Policy magazine. Like that's just something I enjoy doing, and like it has come up in different ways. For instance, when the tariff situation happened, like I already had a huge jump start on knowing what was happening in the world and not just surface level headline stuff, because that was something I really, really took an interest in learning about on a personal level. So I'd say those are the three things. Look at what your peers are doing that are really well. Look at what your immediate supervisor is doing and how they think about things. And then really learn not just your own industry, but also something else that interests you in a lot of depth. That's going to really make you well rounded for taking the next step.
Absolutely. Abhishek, do you want to add anything there?
No, I would just, yeah, I would just second the thoughts that Sagar and Parshva said. I think the key theme is how do you, like, the whole thing about trying, right? That and without worrying about failing. So there is a quote that I've always stayed with me throughout the years, and whenever I'm kind of uh, a little bit jaded, I kind of repeat it to myself that if you try, you risk failure, but if you don't, you already have. So just keep that in mind that that's the way life is. I've met many founders. Like recently, I met a founder whose company is based out of California, but they're serving the Canadian market. Like it's kind of the reverse. Usually, it's companies outside, and then they come and target the U.S. market. But this founder, it's his fourth startup that finally succeeded. He has failed 3 times, and have spent like last 12 years failing, but he didn't give up trying, and now he's finally made it big. Like the company raised $200 million plus. So that's kind of the idea that if you every failure is a path, is a learning experience.
Absolutely. No, great point. And if you don't try, you'll one day live to regret it, I believe firmly. So, better to try and fail than to not try at all. So now I want to open up the floor to our attendees for a little bit of Q&A, and we can do this one of two ways. If you want to raise your hand, I will call on you and you can unmute yourself and ask your question, or feel free to drop the questions in the chat and I can read them to our panelists. And panelists, anything that jumps out at you, feel free to go ahead and answer. But yeah, if anyone has questions, now's the time to raise your hand.
There
We're
are
gonna
three
simultaneously.
questions in the chat, Manan.
Okay. Yeah, Purva, if you want to read them out to our panelists.
Yeah, the first one is very relevant. Sargam Jain says, for a recent graduate to enter into the finance world, what are some of the AI skills that employers may be looking for?
I can try and take this
Parsha?
one.
Yeah.
Um, it's funny. I was talking to someone yesterday who's maybe 10 years older to me, and he was talking about how he moved up the ladder in his career. And he said at some point he wasn't just doing his work, but he was the youngest person on the team, and they needed someone to help set up the computers in the office. And so he was that guy just because he was the youngest and probably the most nimble from a technology perspective. So my point in that story is that that is AI for us today, is that their senior people are looking at the youngest people in the room and expecting them to have the most technologically advanced skill set in kind of those basic day-to-day skills like research or anything that can really help bring efficiency and also speed of access to information. So I think just being able to leverage those resources, like again, everyone has a chat GPT, account, right? But like being able to use it well and also show how it delivers value, I think is really important. So for instance, if you're interviewing somewhere and you have a case study and that case study is for 24 hours, how are you going to be able to show that you really put in a lot of time and effort into that? It's that you have to leverage these types of tools that other people are using and put it into practice. Don't just say like, I know how to use chat GPT, because to me, that doesn't mean anything. Everyone can use chat GPT, right? But showing that I used it to do XYZ things and that helped me get there 5 times faster than trying to do a bunch of calls or research or whatever, I think is a really one way to showcase that you really do know that technology and actually leverage it in a way that's tangible. And that is, brings an ROI in that you've saved 5 hours that you can go and add different other aspects to your case study, instead of spending all that time doing research.
Thank you,
Well said.
Parsha. Second,
Um,
go ahead, Manan. Yeah, you want?
oh no,
I can
was there a
read the
second part of the
question for
question?
you.
Okay, yeah, please.
Yeah. The second part, which is also relevant to a lot of us, is any specific skill set areas that we need to develop from behavioral standpoint to be in the industry? So behavior, culture fit, Abhishek.
Yeah, I think I'll quickly add to that. So I think that as we've been pointing out, there is this technical aspect and then the behavioral or the soft skills kind of aspect of it. So you have to so by behavioral, the one suggestion I would have is, and this I think we mentioned this during the talk was, if you are able to, for the company that you want to work in or the sector you want to work in, if you can listen to the podcast, for example, of people who are leading in the industry in terms of the thought leadership, that is very critical. So either you read a lot, and there are many, many sources, very authoritative sources, reliable sources. So just don't rely on AI, but reliable, sources, authoritative sources. But also listen to podcasts or webinars. Attend industry events if possible. So that you are attuned to what is really the challenge that the industry is facing, or where are the opportunity areas, because otherwise then you're just thinking by yourself, which obviously, as we all know, we can only think so much without actually interacting with others. So that is very, very key, I would say, to understand how they speak, what are the terminologies, what makes them excited and what makes them like feel dejected. So those are the cues you have to get from these things that you're listening to.
Amazing. Manan, yeah, we have two people.
Yes, let's go to the folks with their hands raised. Ridesh Kumar, I see you first on my screen. Please go ahead and unmute yourself and ask your question.
Hi, my name is Ria. I think I actually might just be on my dad's account by accident. But my question was for Parsha. I know you said that you worked in healthcare and in relation to the financial industry, and I am actually someone who's changing my major from biology on like more of the research and sciences track, and then switching my major into business and finance. So I was wondering a little bit more about what the day-to-day of that looked like and what sort of that balance was between like that domain knowledge versus like the financial knowledge?
Yeah, it's a really good question. And I think before a lot of people in our group joined the group, we always wondered, oh my God, I don't have any, like, I had no science background at all. I didn't take a single science class in college, maybe embarrassingly so. And I was not, that wasn't my area of strength. And quite candidly, like, no one in my group at my level had that science background. And a lot of it you can learn. I will say, if you do have that background, it makes it a lot easier to understand a lot of these concepts. Now with ChatGPT, it's a little bit easier. Like, I get a little bit of like a cheat code where I can try and catch up 70% of the way there. But there are basic underlying concepts that I probably will never understand just because I don't have that science background. So I think if you can use that and bring that to the table in such a way that it helps you get a little, again, all of these things, all these tips are to get a little bit of a head start on everybody else. That's just how competitive this industry is. You just have to leverage it the right way. That being said, you don't need that background or skill set in order to do that specific job. There are other jobs, and I'm probably not the best person to answer this question, but there are other jobs where having the technical science background is super useful. So at the biotech investors or even just healthcare investors, they want people with PhDs as well on in their investment teams because and on their advisory boards, because at some point someone with my type of background is not going to be able to understand these very, very complex science concepts and understand, pick up a data set or a scientific study and figure out what the key takeaways are and how that applies to an investment thesis. You kind of do need someone with that advanced science background. So that's another route you could consider as well, is going really deep on the science side and then eventually moving your way onto the finance or investing side or advisory side, where you can apply that skill set in a way that is differentiated and other people don't have, or very few people will have.
Can I ask just like a quick follow-up question on that?
Absolutely.
Sure.
I know you guys have people in waiting in line, so I'll try to make it as fast as possible. What advice would you have for somebody who wants to do your job but in the opposite direction? So I'm applying to like my school's business program right now, and so it'll probably be like 5 to 6 months before I actually get my hand on like an official finance course with a teacher. But then, as I'm sure you know, the recruiting is like 1.5 years in advance sometimes. So, what advice would you have for someone that's kind of quickly trying to go into the opposite direction just because recruiting is so far in advance?
I can try and take this one first, but join the clubs that are relevant. I think if you're kind of in school right now, there are a lot of clubs and resources that you get that way. So you talk to people who are, either senior to you that have already done it, or other peers that are trying to break in the same way you are. Leverage those resources, that network, and those connections. That should help get you a pretty big jump start. I'm sure Sagar and I for sure had to leverage that in order to get our future jobs, because just a lot of people have already gone through that and have those resources. So I think that's one. And then two is to figure out, okay, like what do I need to actually know from a technical perspective and a non-technical perspective for what that path you're trying to go for, and try and get a jump start on getting those resources today. You don't need to wait for class. Like you will learn a lot of things in class, but most of the learning that you do will be from application, not from in the classroom. And the classroom is important, but it's not the most important for the recruiting process.
Thank you so much.
Thank you for thank you for your question, Ria. Let's go next to Shreyas. I see you have your hand raised.
Yeah, so thank you all for your time, coming here to speak with us today. I'm currently a sophomore at the University of Florida, preparing to enter the investment banking recruiting process. I have been involved in, my school investment clubs, I've done internships, but my entire family is in computer science and they don't actually have any high finance connections, especially me living in Tampa, Florida and not, somewhere in the Northeast. So I was just wondering how I could navigate this recruiting process and build connections, especially since most of my connections will come from cold reach outs, cold emails, and not make it feel as transactional.
Yeah, look, I'm happy to answer this question. Similar to you, none of my family's in finance. Parents are in, or dad is in CS. Mom's doing something else. So, yeah, going into finance, I guess I was pretty much the first in my family to really, really go down this route. In terms of leveraging connections, so the way I did was cold emailing, uh, like literally get linked, like look on LinkedIn, filter down people who went to your school first, reach out and like literally just filter out like investment banking analyst, investment banking associate as the title, people in your school, go down the list and email them, like just cold email them. Look, you can honestly, there are a lot of really good resources that you can effectively make like a good prompt. Like, just go on Wall Street Oasis, honestly, even ask ChatGPT like, I'm trying to network with someone in this field, like give me a good prompt and make it all better. um, so yeah, look, just cold email. One thing you're gonna see is only maybe 10% of people are gonna respond to you. It's not that they don't like you, it's that we're super slammed and we just get so many people reach out to us. So one thing I did also that I think stood out from a lot of others is that I followed up. A lot of times with someone doesn't email me back in 2 weeks, I follow up again. 2 weeks after that, I follow up again. Sometimes I go fourth time. I usually don't, but like usually 3 times, but like having like two to 3 week intervals between those. And sometimes like it really helped because I emailed someone, they're super busy. 2 weeks later, they're free, they can talk to me. So that helps a lot. So definitely do the follow part because a lot of people don't do that. I haven't responded to every single student who emails me, but pretty much everyone who's ever followed up with me, I always get on a phone with them. So that's just one thing I can say anecdotally. Like on the other side, it definitely like the follow-ups help. And look, third thing is look, after you go through your school list, like I said, you have a lot of communities. You have the Jain community. Try to leverage the Jain community as much as you can. Leverage your high school, any interests that you have in common. And sometimes it's like, oh, you go to University of Florida, like find people who went to other Florida schools, other maybe non-target schools, say like, fellow non like we were both in similar situations, both maybe non-target schools trying to get into banking. Like, are you willing to help out and talk? So or don't say that, but like say like, are you willing to chat a little bit about your job? Look, we all understand why you're emailing. Like I know everyone wants to make it seem less transactional, and I totally get that. That's a very important point. But ultimately, everyone knows exactly what it is for. The best way to make it non-transactional is to make it an interesting conversation. Look, you can have your questions, but just go off there. Don't just read from a list of questions. Hopefully have a two-way back and forth conversation and just make it a little bit more interesting. And then, when recruiting comes along or you apply, you can give them the nudge, be like, hey, really like your conversation. I recently just applied to the firm. Then say like, is there any way I can best position myself going forward? well, we totally understand what that means. Like, you don't have to really sugarcoat it. And look, if they like you, hopefully they can pull.
Thank you so much for really help clear things up going into the process. I appreciate it.
And
Thanks.
actually, Shreyans was ready for the show. He was all dressed up. I saw him.
Yeah, I assumed we'd all have our cameras on, but
That's
Thanks for your
amazing.
question, Shayaz. Anyone else have questions? I don't see anything in the chat, but now is the time to please raise your hand and speak up.
Yes, there was there was Manan Ruchika Mogna from Canada. Is a CPA, is an accountant, registered accountant, and she wanted to learn about different AI tools that can help her in her field as an accounting.
See, one of the approaches I would suggest for that question is that, when it comes to AI, it depends on what you're exactly trying to learn. So without having that context, I would say generally speaking, so I'll give you an example in finance. So if you're talking about product development, that's one of the areas of expertise for me. So I'll give an example from that area. You have many new AI-based platforms like Lovable.dev, or you have Base 44. You can actually develop full applications end to end just through prompting, but then you can launch those applications as well. Because when you're launching any application, you not only have to think about how it looks, but you also have to think about the back end, how you host it, what's the security, how would the data exchange happen between a client and a server. So just that's just one example. So similarly, from an AI perspective, on the CPA side, accounting tech, it depends on what you're trying to get to. If you're trying to show that, okay, these are the AI based tools that are in the market using AI, like on the accounting side, then that's one approach. You can actually ask ChatGPT to list the companies who are using AI in accounting. There are many companies who are using that, and what kind of data they're looking at. What does that data mean for the analysis when you, as a CPA, when you're doing the analysis, financial analysis? So it depends on what your goal is, but I would like that's one way to look at it.
Thank you. Sheetal Vora has another question. What can you do in HS to show your interest in fintech? How do you get externship in HS? I'm not sure what is HS, but I think she's interested in the fintech space and what colleges or universities might be applicable.
Yeah, so I think
She's saying
there are
in high
within
school.
fintech there are many different.
Yeah. She, she's saying, what can you do in high
Oh,
school to show
high
your
school.
interest
Okay.
in fintech? Yeah. How do you get externships in high school?
Yeah, so it's again, that's like it goes back to the discussions we were having. The goal is, what kind of within fintech are you just looking to try any fintech versus you have a specific area? If you're generally trying for any fintech based on where you're located, so for example, if you're in Toronto or in New York, there are so heavy concentration of fintechs. So you can then start to create that list and start reaching out to these companies and say that I want to learn. I'm in high school. I just want to do a shadow, figure out what area seems to be of interest, marketing, product, technology, development, front end, back end, UI, UX. So based on that area, you just tell them that this is where I want to learn more. And that's how you kind of get started in the high school.
Great. And if Nikita is around, Nikita might be able to provide more
Yes,
Yes.
insight. Nikita.
yes, definitely. So, especially with Accept You, also we have a lot of programs, as I mentioned, with business and entrepreneurship. So we would be able to help students like find programs, research, faculty to work with, all of that. So if you're interested, you can just schedule a consultation and to get some more information about how to find that path, to get that experience before college.
And the second part of her question was, what were your majors in college? Is there a specific engineering major you recommend, or better to do finance and economics? So I'll pose that to the panelists as well.
See, specifically in fintech, I've seen people coming from all areas. Specifically in undergrad, it's better to have exposure to both sides. So that'll help. Like you'll have a combination of finance and technology, depending on your area of interest. If you're interested in, say, for example, front-end development, then dabble into that. If you're interested in design, then UI, UX kind of courses would also help. But having some finance courses, like basic financial accounting, or some bit of corporate finance, that'll also help a lot. Um, like foundational courses would definitely help. So I've seen people having a combination before in the initial years, like the first 2 years, and then they start to specialize in the year 3 and 4. But doing internships in different areas, whether it's a bank, whether it's a fintech, whether it's an incubator or an accelerator, those are very important.
Thank you. I'm actually listening for my son, and I'm a physician, so I have no clue about anything you guys are talking about, but I'm trying my best. So thank you.
Yeah,
Wow.
yeah, good to be, for you to be here. So that's amazing.
Sheetalben, which city are you from?
I'm from Charlotte, North Carolina.
Oh, wow. Okay.
So we're
Yeah.
a big banking sector. And my son is very into these sorts of things, but I feel like, I it's very hard for me to navigate for him. So I appreciate the advice that everyone's giving. And we have a lot of the banking, Bank of America, Wells Fargo. And they have like Bank of America has a big, I think, a volunteer high school program that people can become volunteers. So for others on the call, that's something to look at, and it's in major cities. But again, navigating that role, and I appreciate you all saying that it's important to do something other than just business, because I agree with you that you're looking for a diverse background. So thank you.
Thank
Thank you for your question. I think let's take one more. We have a hand raised, Lauren, and then we'll conclude the session.
Thank you. My question is regarding the recruiting process in private equity specifically. Someone who is trying to enter as a mid-career. For example, for me, I have 6 to 7 years of FP&A corporate finance kind of experience, but majority of the private equity recruitment happens at the earlier stage. So what are your guys' experience on mid-career private equity entry?
Yeah, I can try and take this one. Again, I maybe I don't have the best answer, but it is very, very difficult. It's I think Abhishek alluded to this earlier, but it's one of those traditional slash old school type of roles where people have a very specific mindset in terms of recruiting. So I would say if you do your MBA, it kind of gives you a chance to re-break into those types of roles. That's probably the quote unquote safest or easiest path to try and get into those types of roles. I'm sure that there are firms that will hire kind of mid-career and from different backgrounds, but you're going to have to do a lot of that cold outreach and really, really, really try and fail. Like that's unfortunately people really like the linear path on like the maybe the larger firms at least, but I do think some of the more mid-market and smaller firms will hire people with different backgrounds like yourself because they realize, okay, you've actually been in the inner workings of a company, you probably know a lot more about operating, and that can be really useful in that skill set. So two ways to do it. Do the MBA, and that gives you kind of a reset button to like really have full app. You're gonna have to go really, really broad and look at a lot of opportunities, and also pitch yourself really well and show why you are going to be good at that job. But it's going to be a little bit of uphill battle.
Yeah, I'll pretty much have to echo on Parsha's point because I'm just looking at my firm and how we've hired people as well. The MBA, potentially with your background, you could probably go into banking because I know in banking they were a little bit more receptive to laterals. You could probably start as an associate there. From there, maybe you could go to PE. Still, it's going to be another at least 2 year process of banking and then go to PE from there. But that is a path if you don't wish to do an MBA. And the second thing is back to Parsha saying like if you have like a niche and industry that you really, really know well, then you could probably really try to angle that, like from his question before when he was talking about healthcare. Like if you're a PhD in biotech, maybe you could join a biotech private equity firm because you can really help them on whether the companies are investing in is actually good or something like that. So if you have like some niche, some really strong skill set in some specific sector, you could try to angle that. But other than that, MBA or go to banking and then go to PE from there.
And I'll just kind of like put out a scenario in Parshva and Sagar, like see if it makes sense. I have seen in specifically in the banking and finance space, many times people who want to do lateral entries, they would join an association. So, for example, a PE association, and these associations are always strapped for resources. So they're always looking for people who can help. And that's why you show up at those events, you're doing your job, but you're being volunteering at these events, being part of a committee, and that's how you're learning and making connections. So do it over a year, a couple of years. But like that's what I've seen, but I don't know if if it works like that.
I think the connections definitely help. So you have to do both. You have to have the connections, and you also do have to convince someone that you are the right fit for that job. So I do agree, like, those things, but that's a long game. Like you have to be willing to invest the time to be able to do that. I will say the PE is like, I think people think of like the big five firms. There are so many small firms also doing really interesting strategies, and they may be hiring from a lot of different backgrounds. So I think just making sure you expand your mindset outside of just, I want to work at Blackstone or KKR or Apollo or whatever those big firms are, and saying, okay, maybe I can go to a place that has, a $50 million fund or $100 million fund. And really, I'll be like the key person there on the team, and I'll be driving a lot of value and I'll learn a lot. Those are the types of firms that may also be willing to hire from very different backgrounds, because the Blackstones and KKRs and all of them are getting a bunch of people with the exact same profile and background that they aren't going to look as broadly as, because they just don't need to, quite candidly. It's very old school, unfortunately, and not as nimble as other industries.
Agreed. Thank you.
Thank
I
you.
think Ronak had a good point on that. Ronak, would you like to highlight what you wrote in the chat?
Hey guys, yeah, I do spend a lot of time on LinkedIn, but I've explored like paths for folks in PE, and there is again the traditional IB to P route, but I've also seen people do startups, exit, and then switch over to P and VC. That is also intersecting a lot nowadays, where you see like again, it's just usually the investment stage that where most of the P and VC firms differ. But the other route that I've also seen is you start in internal corp FP&A, you try to move to PE ops, do PE finance, internal finance, and then try to, again, way more difficult, but try to get to the front end. So again, two more options if you want to try, other than the MBA route, obviously.
Thank you, Ronak. Yeah, we are getting towards the end of the session. We have about 5 minutes left in our allotted time. So I just spotlighted Ronak because I want to pass it over to him for that special announcement that I alluded to at the beginning of today's call. YJP we are excited to announce hosting our first standalone convention in over 5 years. So Ronak is going to talk a little bit more about what the convention is going to entail.
Yeah, can you see my screen?
Yep.
Yep.
And is the right screen or?
Yeah, it's
Yes.
the
We
right
see
screen.
a
Yeah.
blue screen that shows the convention logo.
Awesome, awesome. Okay, so yeah, as Manu mentioned, with big news. In about 5 years, like for the first time, we're having a standalone convention. This is the logo, and the theme for the convention is lighting the path forward. So we again want this convention to be a lot about professional networking, startups, entrepreneurship. So we're going to focus a lot on that. But just to share more details on the convention. So the convention's happening from November 7th to 9th this year. It's going to be held in Delta Hotels at Somerset, New Jersey. It's like a 4-minute drive from JCNJ. So I know Parshwa and Sagar, you were mentioning about growing up in New Jersey. It'll be nice to see you guys as well. Um, just around what we're planning for the event, for the convention. We're going to have a lot of both daytime and nighttime programming across the 3 days. So we're going to have keynote speakers, collaborative sessions, workshops, and then also nighttime socials. Food's always a plus. So if you're not in for the networking, at least come for the food. The food's going to be great. And then the big announcement that we're doing is we're gonna have a Shark Tank style competition at the event itself. So if you're interested in starting your own business, or if you want to learn how to pitch, or if you want to pitch to VCs and potential folks in the industry who would be interested in investing in your company, this would be a spot. We're gonna have a whole Shark Tank style competition during this convention. Um, the last thing I would say is just the price. So early bird is going live soon. It'll be $175, limited quantities, and then regular will be at $200 for the whole 3 days for the event. And then attendance, we're expecting around 200 people for this event. So if you're interested, again, just message us, email us, follow us on Instagram. We're gonna post more details there, and then again through email as well. But super excited to kick this off and then make this announcement. And we're hoping to see all of you there. So definitely it'll be nice to meet in person as well.
Absolutely. Thank you so much, Ronak.
Manan,
And
Apurva, anything else to add for the convention?
yeah, I'll pass it to Apurva first.
No, thank you very much. I think from my side, I look forward to connect with a lot of you. I think we had some amazing discussion today that we can follow up when we meet in person. We just spoke to the Delta executives. The Delta Hotel is one of the best ones in New Jersey, New York that you can find. So if you are not for the networking or the food, the hotel will work out for you. And I'll pass it back to Manan on that.
So stay tuned for some more information on the convention. We're going to be releasing that soon, and registration is going to be opening next week as well. But with that, we're at time, managed to finish up in exactly 2 hours. Thank you so much to our panelists, Parshva, Sagar, Abhishek, for your time, your thoughtful insights, and, all that you do and for joining us today. And a special thank you as well to our sponsors, Manish and Nikita from Accept You, for making this event possible and for your generous support. We hope all of you are leaving not just with knowledge, but also that you gained actionable insights that you can apply to your careers. And we will be distributing some information. If Parshva, Sagar, and Abhishek are okay with it, I will share the links for their LinkedIns after this call. Please do be respectful of their time. They are busy, but if you do have any sort of ongoing questions and you want to ask them or seek any mentorship, that is a possibility. So with that, we're going to wrap up the call. Again, thank you all for joining and have a great rest of your weekend.
Thanks, everyone.
Thank you, everyone.
Thank
Take
you,
care.
everyone.
Thank you.